South Africa's economy has yet again shown a negative trend. Statistics South Africa announced that the gross domestic product in the fourth quarter of last year decreased by 1.4%. The data shows that the economy contracted for the second consecutive quarter. The biggest drags are growth in sport, the wholesale trade, motor trade and accommodation, as state-owned enterprises like South African Airways continue to wrestle with their finances. State SA reports a decreased economic activity in land transactions and airport transport. This is worrying news as South Africa awaits Moody's decision on the country's investment grade. Joining me now to discuss this and more, Ndumiso Hadebe. It's good to have you, Ndumiso. First and foremost, did you expect this number?
I think I did anticipate a technical recession, but I think the optimism in me was at least anticipating a number that was below 0.5% in terms of growth, because typically in the fourth quarter of every year we tend to see an uptick due to increased consumer spending. And of course, the South African economy, 60% of it, or 60% of GDP is driven by consumer spending. So this does indeed come as quite a surprise.
Overall, it means the GDP in 2019 grew by 0.2%, which is far below even what the IMF had actually predicted. I mean, it was already bad, but we even did worse than that. Unable at this point, let's say, to quantify the exact impact of load shedding, but they're saying it's just poor economic demand.
It's a combination of the two. Poor economic demand based on consumers who are quite in a difficult situation from a disposable income perspective. But as well, we did see the significant impact that the lack of reliable electricity had in the first quarter of 2019 as well, with that contraction of around 3.2%. Now we're seeing, once load shedding transpired again in the fourth quarter, this contraction that we're recording now, that has led us into a technical recession. And I think it continues to affirm the structural blockages that South Africa continues to face. On the one side, we don't have enough revenue at a fiscal policy level to be able to reignite growth in important sectors. But again, there are instruments that we would have, even in those important sectors, particularly high employment multiplier sectors, tourism, construction, agriculture, where a lot or the bulk of South Africans who are unable to enter the knowledge-based economy in South Africa are able to participate in, and as a result, that will respond to the weak demand question that the South African economy currently faces, because GDP measures exactly that, productive outcomes, and as a consequence of increased spending in the economy.
Yeah, let's look at it sector by sector. 3 out of 8 production sectors contributed positively to the economy. Transport, storage, and communication. What's happening there in those industries? I mean, it's the biggest drop. Minus 7.2%.
It's related to a lot of companies are also cutting down, particularly with respect to their budgets and their forecasts for the medium term. And that is seen even in the business activity and business confidence outcomes or anticipations with respect to those sectors. Those particular sectors have also been impacted by the gradual increase in the petrol price. So some of those factors are exogenous as a result of fluctuations in the South African currency, and that is also evident. But in addition to that, communications is also affected by load shedding.
I'm surprised by that. Actually, I'm trying to make sense of it, or what's actually happening. You're right, because cell phone companies were complaining about the load shedding, because that certainly did affect their networks.
It certainly does, and it affects overall productivity. Whenever there are schedules or incidences of load shedding, planned or unplanned, ultimately it affects whatever productive outcome any firm would have, or any community, or from a macro level would have. So hence this reflection speaks to that particularly. But I think even where the growth took place in finance, in the mining sector, where we saw we benefited from an increase in improvements in prices of palladium and platinum as a result of what is happening globally. But finance again speaks to the testament that South Africa's economy is increasingly modernizing and knowledge based. And as a consequence of that, it continues to enjoy a larger weighting in terms of the value or the contribution that it has to the South African economy. It creates a dilemma, because the bulk of South Africans, in terms of their skills profile, are not necessarily skilled to work in knowledge-based sectors, as it were. So you have a dilemma to say the bulk of South Africans can't work in this sector, and yes, this economy demands these types of skills. What then do you do on the supply side as government and policy level to ensure that you respond to the demands from the labor sector, and as a consequence, the South African economy is able to grow in that particular fashion? Secondly, South Africa is a commodities-based currency. Yeah. So mining, manufacturing is a sector that we ought to be leveraging off quite significantly, particularly if we're to discuss the value change in the mining sector. The mining sector is a great input to what transpires in the manufacturing sector, and our inability to be able to sort of leverage that opportunity is reflected in this continued muted or flat data.
Well, I suppose that what you're saying, because our focus is on agriculture, but agriculture is not showing the growth that we are actually looking for, because agriculture very labor intensive, very low skilled, and it's a hands-on type of industry, but it's not showing the type of growth that we need to see.
It's not, and some of the things are within our control, some of them are not. With respect to the things that are not within our control, the effects of climate change, we've had endured over the past couple of years the effects of climate change in the form of droughts, and as a consequence of that, farmers have been left quite constrained, even from their working capital, to be able to reinvest in new seeds and new equipment, and ensuring that they're able to withstand the challenges that come with increased droughts. But at the same time, the agricultural sector is an important sector, not only for domestically for us, although we are currently experiencing weak demand, but we export a lot of our agricultural products to the US and Europe as a region. That augurs well for our balance of payments, and as a consequence, it contributes ultimately to the stability of our currency, which then feeds back into the cost at which farmers are able to purchase certain goods and products that they are sourcing internationally as well. So there's that particular dilemma in the agricultural sector, which does indeed require greater support and interventions.
Now, when you look at the currency, just before we came on at midday today, 15 rand or so, but a minus 0.9% decrease. And I'm sure it's getting a little bit worse right now.
It's not great news, and you mentioned that, especially with the March 27th outcome from Moody's, it's not a great set of data that we're putting out. There's also another consideration around the availability of the growth rate of the money supply in South Africa, which is denoted as M3, which is a number that is calculated by the South African Reserve Bank. It essentially speaks to the value or the amount of money that is available in the form of long-term and short-term deposits and cash that is available also from pension funds as well. Currently, the growth rate of money supply in South Africa is around 7%. At a time when the South African economy grew at about 4.5%, the money supply was north of 25%. And why this is important, why money and the circulation of money is important, is because whatever happens with the growth rate in the money supply first affects asset prices, so what we see in terms of bonds and the financial markets and equities. It then affects the real economy, which is for both businesses and consumers, and what we spend, whether or not it's available, whether or not it's affordable. Thereafter, it affects the inflation outcomes or anticipations that we have in the South African economy, and then ultimately interest rates. So that is another variable that we need to look at in terms of what role is the money supply playing in terms of stimulating or not stimulating aggregate growth or aggregate demand in the South African economy as well.
Let's look at household expenditure as well. Household final consumption expenditure increasing by 1.4% in the fourth quarter, 0.8 of a percentage point to the total growth. What does that tell us?
I'm more interested in the product categories where the spending has taken place. And when we look at it, it's clothing,
clothes,
food, education. When you look at product items such as restaurants, recreational activities, they're basically zero. This, I think, it speaks to the prioritization of South African consumers, that in this tough or flat economic environment, and with the lack of disposable income, and the fact that consumers are increasingly relying on credit for their own means of survival to purchase those types of products, again, it speaks to a need for a story to reignite the South African economy, not only from the perspective of increasing wages for those who are existing income earners, but also increasing employment, because what that then does, it broadens the tax base. I think with the recent budget outcomes, we've noted that just over 15% of our budget is reliant on high-income earners in South Africa. So it is not a sustainable position to be in. Increasingly, the focus of the medium term needs to be in areas which will reignite growth in the South African economy. Yes, there are short-term levers that we can use, but I think, again, this data really affirms the focus that we need to have in high employment multiplier sectors and really choosing a position as South Africa. For economies around the world that have chosen to say, look, we are going to take, in our social planning, be an agrarian economy, they take the supply side policy position to be exactly that. Right. Whereas in South Africa, we also need to define what is our position and what is our value proposition when competing with other economies around the globe.
If you're Cyril Ramaphosa, you're Tito Mboweni, you're sitting and you're looking at this data right now, what should be the first thing that you're thinking about?
Well, below the things that we just discussed now, of course, Eskom, SOEs. That's number one. But secondly, really honing in on industries where we enjoy a competitive advantage as South Africa, which are those sectors: mining, manufacturing, agriculture, tourism. Those are quick wins which we can leverage. We also enjoy a very strong financial services sector, which is something that we can use to enable development finance in projects that would ignite the growth that we're looking for.
Ndumiso, appreciate your time. Thanks for coming through.